Hey, we got CPI, we got PPI, and it's Vanna week as we prepare for markets for December 9th, 2024. Hi, I'm Josh, and we're Trade with Profile. We're a skill development firm. We're coming alongside developing traders and helping them get to a position of consistent profitability by learning how to use profiling tools to organize market information and then look for what we call 4-question playbook trades. And so over the next 10 minutes or so, we're going to get a plan for the week, look at some of the core futures products, what we see in the profile, and what we're looking to express around, given a couple binary events and some other things that are in play. So with that, let's just talk real quick about kind of where we are in terms of the macro narrative. We are at the end of the year. We got a couple binary events yet left in the week or in the year to watch, this week being one of them. But really, overall, this is a period where it's pretty bullish. This week we got CPI, PPI. It is Vanna week. So what's Vanna week? So Vanna week is the week before OPEX. Next week is triple witching OPEX. It's kind of one of these weeks structurally that because of the pending OPEX and because it's triple witching, so we have rollover that's going to happen between the December to March futures in the indexes, that we may see some volatility, but it's likely going to be buoyant later in the week. So imagine someone kind of jumping in a pool and with a float and coming back up. So if we do see any liquidation, I think that those are viable dips this week, and something that is often looked forward to. Vanna week is kind of one of the more bullish weeks of the month. So that's out there. Again, we've got the PPI or CPI and PPI Wednesday, Thursday, and then we'll prep for OPEX. We'll begin contract roll on Friday as we go into that key OPEX week and the last FOMC of last week. So as far as other things on the calendar, last week we had non-farm payrolls. That was at the end of the week, so we're going to be carrying forward those references as we go into this week. And then, as we go into looking at what we're expecting for the week, kind of two questions you can always ask. And, one is, what direction is the auction attempting to go, and how good of a job is it doing at that? So as we start by looking at ES Futures here, we're going to essentially ask that question. And I'm also going to start here. So this is the SPY. This is the ETF that tracks the S&P 500. Remember, there's an S&P complex, right? So there's the SPX index, there's ES Futures, the SPY, and they all kind of work in tandem. Here we're looking at, as we go toward the end of the year, I'm still looking at around 620 as the kind of the key objective. By the end of the year, we're still a little bit of ways from that. However, just note how this year we've held over all of the significant references. And I do want to call out that the expected high for 2024 was all the way back down here at 526. This has been an exceptional year, not what anybody expected for an election year. Almost, I don't know a single Wall Street analyst that got it right. Everybody had to revise higher, and that's and part of the revising targets is what's pushing us higher here in the end of the year. There's a lot of chase going on. Because so many people were wrong and it was such an odd election year. So path is still there. You can see we're pushing a little bit away from value in this last push, but we're holding all of the references that we need to hold. So if we can get any wiggles back in this direction, that can set the stage for that final push into the end of the year. Looking at the ES specifically as we come into the week, last week we started balanced in a range, and then we had a slight gap and then balance. And non-farm payrolls had a push off the open, but back to the middle. So what's that going to mean? That the kind of the key reference for the week is the 6,100. Watch the edges. So we'd expect a push away from it. Now to the upside on to Monday, we're looking towards 6,130. If they push up this way, they could test and push back in the middle. This is kind of like a Monday plan. Overall for the week, we're looking towards that 6,180 to 6,200 potential. If we see any early pushes, that could clean up some of the structure before snapping back. So if we see early liquidations, everything is going to be key from 6,100 within a range of 60.75 to 61.05. So watch those edges. If there's tempo outside of those edges, look to go with that. But then, for Monday, From the inside, we're going to look to test one side or the other and either come back or push like that. Okay. NASDAQ. NASDAQ is next on our list. Looking real quickly at just who's kind of driving the show of the last week. It was all Tesla. Tesla continues to really impress. NVIDIA has gotten back near its earnings VWAP, but Tesla has been the horse that's really been driving things. A good one to watch as we come into the new week. You can see here, it really, really moving. We're kind of in one of these periods where of these 7 names, there's going to be one that kind of takes up the mantle and keeps the thing moving forward, especially since we're looking at next week's FOMC and still expecting a rate cut. So there's fuel there to get us continue to keep us going, as well as corporate buybacks that present a little bit of a bid as well. Let's look at the NASDAQ chart and kind of see where we're looking as we come into the week. Pretty steady one-time framing activity with gaps being held. We had a little bit of balance and then a push higher to end the week off non-farm payrolls. We're holding all the references that we need to hold. We're holding Powell's speech this week. We're holding non-farm payrolls. Those are all references to continue to carry forward. Note, though, at the end of the week, we did not pull the 5-day significantly higher with price. It's a little bit lower at 520. And then the 20-day is back here at 21,200. Still looking at 22,000 as a destination to the upside and achievable this week. But given what you're seeing here in the 20-day and the 5-day, do not be surprised to see the auction kind of push into this, clean up, and bounce before pushing in this direction. If we were to go straight up, what's that going to do? It's going to make this thin, then that's going to take us to an extreme posture, and that would favor us fading back in this direction later. Remember, there's price either is going to go back to value or value is going to follow price. So we look at value across multiple time frames, being it a 5-day or a 20-day. You can look at price, 5-day, 20-day, and get 3 references to kind of know where you are and just rinse and repeat. As we come into Monday, we'd expect new RTH highs toward 21,800 is kind of upside. So any wiggles early and then push in this direction, unless we get acceptance below the open on Friday, and then we could clean up back in this direction. And in any early liquidations in the week are likely to be bought later. Any early pushes will either go sideways or fade later in the week. That is kind of the expectation. So if you want the further details of the plan, just make sure that you download the PDF and get a look at that. That'll give you an idea of what we're looking for there, okay? Let's go look at the Russell, because the Russell has been a little more divergent relative to the ES NASDAQ. ES NASDAQ have been stronger, Russell has not, and we can see that just looking here at the price movement. Even over the last week, you can see the divergence of the NASDAQ certainly been strong relative to the Russell. So we could see some movement back in this direction, whether the Russell moves up to catch or the NASDAQ, just somehow this divergence, looking for this to come back a little bit. However, it's not required because they're not highly correlated, not nearly as highly correlated as these two. So this is more surprising to see this type of width between the NASDAQ and the ES. So I would expect these to come back together as the week progresses. But as we're talking about the Russell, couple things, very much in balance. So we've got kind of a zone here of between the 5-day and the 20-day that makes up kind of everything. We've got 2,400 as a key long-term several weeks of range that we've been in. Note that the election trailing VWAP is down there. We've not yet really tested that. I would like to see the auction test that. I think if we could get that early in the week, then we could see a snapback this way and then go to the other side. However, that's not required. And on Monday, you'll note that on Friday we had an inside day, right? So this is inside of the prior session. So watch the edges, and we'll look to go with wherever we extend toward. If it's to the upside, we'd look back towards 2435. If it's the downside, definitely new weekly lows. We'll nab that election VWAP and then go from there. So higher probability for a pretty decent directional day in Russell on Monday. But overall, as long as we're below this zone here, it does favor the sellers. If we can get above this, then that sets the stage to push to the other side of this range. And again, it is Vanna week, so any early weakness that doesn't get followed through, look for that to express back higher as the rest of the week progresses. Okay, crude oil. We've already opened the session on crude, and we can kind of speak about some of the expectations versus how this played out. Gap lower on Friday. Our plan last week was around this key 69, and then we said, hey, if we can, and that was based on this close on Friday. That got follow through, but then we rejected back up, and then came later in the week. Note we're below all of the trailing EIAs for the last couple weeks, and we had a gap. We're at the bottom of a longer term range. There's a longer term range from 67 to 71 halves. Okay, got prior month low down here that's on the radar. 69 will continue to be significant this week if we push higher. Well, look, here we are. We're already gapping above to start the week. If we push higher, then look and then rotate lower. If 69 holds, look for new weekly lows, look for new monthly lows as kind of the key idea for the week. However, if we accept above, we could push all the way to the other side of the range. All right, so that's kind of the second idea, is that we could, and it's all going to hinge on where we are relative to 69. Now, on Wednesday, we do have EIA. We also have an OPEC monthly report. Now, OPEC controls Brent crude. That's the international standard, not Western Texas Intermediate, but they're definitely sympathetic and will move off each other. So if you see some larger movement on Wednesday, it's largely in sympathy to what's happening in that. However, we're not in a period of the year that's going to be necessarily bullish for any type of crude oil product unless there's talk of cuts or there's some geopolitical flare-up. There's just not as much demand, especially in the U.S. for Western Texas. So keep an eye on that 69. That's your key pivot in this larger range. Watch the edges. See if we accept below. If we don't, we're going back to the middle. And if we can accept, we can push, and we can push quite a bit. Below 67, we got 66 is the next spot, and then 65 below that. Those are all achievable this week if we get some tempo to the downside, okay? All right, let's look at the quick sheet real quick and get an idea for anything else that's out there that is of interest that should be on our radar. A couple things to watch, just noting how low IV rank is for the equities. We're just getting diminished participation. Still seeing some pretty decent R-vol, although at the beginning of the session on Friday, it was actually pretty low. That's pretty surprising. Some good movement here in the energy space. So that's good to see. So my rule of thumb is, as long as there is significant relative volume, we can continue to look for opportunities. We are in that period of the year where participation is going to wane. If you see something significantly below the typical relative volume, like here, we've got live cattle, lean hogs, significantly low relative volume. That's not a great product to be in at the moment. So let's wait until we get some R-vol up there, or if you're going to do something, structure it in options where you got time and you're not doing something intraday. So as long as the R-vol is pretty good, we're in good shape. Gold continues to play around this 2664, so keep watching that price. Bitcoin, we got that 100K. Couple prices to watch will be that 96,425. That's last week's point of control. Really anywhere from 9,600 or actually 96,000. That's a little bit of a floor. I'm expecting some balance now that we got that significant reference. So that was such a big psychological hurdle. Now we're kind of waiting to see. And what does that look like on the chart? Let's go look at this real quick. We've had a really solid push higher last month in Bitcoin. Now what's the product looking to do? It's looking to balance, and we've got some balance here. Still, relative to a lot of products, the futures are not as liquid, and so that's why you can see so much movement in terms of what the profile looks like relative to other products that would be, maybe a little bit more developed of balance back in here, but that doesn't matter. The kind of the key areas to watch are 90K. I'd call that kind of the key balance area. Watch for tests. I think if you test below this and come back, that could be a good buyable opportunity if given. Certainly not going to be chasing above when I'm above value on all time frames. So either need to see this thing balanced, need to see some liquidation before I'd be interested in acquiring any more for anything longer than a day. Okay, so that's my 2 cents. you can do with it as you see fit. Just as a quick reminder, we're in Playbook development season. So just my opinion, you're welcome to do what feels good for you. But this is not necessarily the best time of the year to try to express and get to some, either make up some profit or really push things. This is a great time of the year to get prepared for 2025. So use the next couple of weeks to figure out where is your anchor trade going to be for 2025 within your playbook. And so, what do I mean by, playbook and all of that? So I have a number of playbook setups that I look for every day. And if you get the daily outlook, you'll see setups that are on my radar. All of these represent driving inputs in the market. I know the conditions. I know the targets. I can close my eyes and imagine how that trade plays out. And then it's just a matter of execution. It also allows you to measure your performance relative to those. And this is the time of the year when it's really great to figure out what that is. How do you determine, if you don't have a playbook, how do you figure that out? Is that you use 4 questions, and they are as follows, okay? They're 1, what is the opportunity and the target? So whenever I think about a playbook opportunity, it's all driven by where do I believe the auction is going to go. This is like a key reason to use the profile. Next, what am I willing to risk relative to that opportunity? And I want that to be asymmetric, meaning that target that I've identified, I want the risk to be a fraction of that relative to where I would enter. And then what would tell me that I'm right? Once I'm in this trade, how should it behave? If it's a playbook opportunity that's going to repeat itself, it's going to behave in similar ways every time that thing shows up. So how is that? So that I can monitor that, and that helps me stay in the trade. So for those of you who are struggling staying in the trade, we're all storytellers. So, and some better than others, right? But once you're in the trade, how do you expect that to go? How should it go that can be further confirmation for you? However, at the same time that you're doing that, you have to be mindful of what would tell me that I'm wrong. The brain doesn't like to be wrong. We're not wired that way. It has to be something that's cultivated. And this can turn someone who has a really good system and is identifying good opportunities, but then this is where that risk management portion comes in that you hear about, hopefully you hear about often. If you don't manage the risk for the times when it doesn't work, then that can wreck all the times that it does. To be able to be better at that, priming the brain for the action that you need to take to preserve capital for when it doesn't work is crucial to activating the part of your brain that you'll need to be able to pull the trigger. So if you're doing that on a discretionary basis, you really need to set your brain up for success in that way. And so I don't even pull the trigger unless I've asked and answered all of these 4 questions so that I know, yep, stay with it, or nope, if these things happen, I'm out. And then I'll reassess. That's what helps us stay in control of an otherwise random environment. So by identifying the answers to these 4 questions, it's putting you in the driver's seat, and it's forcing the auction to come to you. So if you hear people say, well, make the market come to you, what does that mean? It means that you're setting conditions in which you're willing to participate. And if those conditions are not met, you don't participate. That's putting you in the driver's seat of a random environment, which is, I think, a place that you want to be. Okay. So that is what we've got for this week. A reminder, the bell curve is your friend. So, when we look at a profile and we look at the distributions, when is it complete? When is it incomplete? If it's Gaussian and fully developed, we're at equilibrium, that's a complete auction, and that likely means that that auction is looking for new information to be able to decide that value resides somewhere else. If it's skewed or imbalanced, that means it's trying to still find where value is. So remember, that bell curve is your friend, and it can keep you on the right side in lots of contexts. So hope you have a great week. We'll watch how we behave around CPI, PPI, and remember, it's Vanna week. Next week, last big week of the year, we've got FOMC, we've got VIX-spiration, we've got triple witching and contract roll. A lot of moving parts in that last week, big week of the year. Should be exciting, but if you're working on playbook development, it shouldn't really matter. Your eyes should be towards 2025 and looking towards the great opportunities that are going to be out there. So love to know if this has been helpful, or if there's something that you'd like me to cover in these that would be helpful. We'll be back with the daily outlook for Tuesday, and we'll talk to you soon. Peace.